every beginner forex trader struggles with this, and I know that feeling all too well, because when I started forex trading 4 years ago, I was just like he, excited about the opportunities in forex trading and also the lifestyle on social media, but I was constantly losing trades upon trades, blowing several accounts. At least I blew over 30 profit accounts, and I was questioning myself if I could ever become a profitable trader. But here is the turning point for me. The day I discovered how to properly use Trendline trading strategy and combine them with market structure, price action trading, everything changed for me. I went from being an unprofitable trader who was confused and frustrated to finally making consistent profits month after month in the market. And in this video, I'm going to share with you the exact trendline techniques that helped me turn my trading around. If you're a forex beginner, an unprofitable trader, or even intermediate and still struggling in the market, this video is exactly what you need. Make sure you watch until the end, because the strategies I will show you in today's video could be the difference between blowing another account and finally becoming a profitable forex trader. If that sounds good, make sure you like this video, subscribe, and turn on the notification bell so you never miss the next updates. And don't forget to join our free signal community on Telegram, where we share weekly signal setups to help you grow your trading account faster. Click the link below this video description to join now, and I will see you after the intro. The best time to use this blueprint is when the price action is trending either to the upper side, higher high, higher low, then higher high, or to the downside, lower low, lower high, lower low. But the first example I want to show you right now is how to use this trendline trading blueprint for bullish market condition. The first time frame you want to use is 4 hours time frame to establish the trend, right? Then your entry time frame will be 15 minutes time frame for execution, right? So I'm going to walk you guys through the step by step so that you'll be able to understand this blueprint and how to use it to trade trendline trading strategy. After establishing the trend on the 4 hours time frame, the next step is to establish the recent higher lows and draw the trend line to connect them, right? The third one is the entry, whereby we use chart pattern for our execution on 15 minutes time frame. If you look at the price action right now, you will agree with me that buyers are the one in charge of the market. But before that, sellers were the one ruling the market, whereby they created high, lower low, lower high, lower low, lower high, lower low, lower high. Then price created a new higher low, higher high, higher low. Then the price action invalidated the major swing lower high here on 4 hours time frame. And the rule says whenever the price action is trending to the downside, the last lower high must not be taken out. The price must not close, or the candlestick must not close above the last lower high during the downtrend market condition. In a situation whereby the candlestick invalidates the last lower high, is a sign that the buyers are now back in the game to keep on buying the price action to the upper side. The current market condition right now is bullish market. The buyers are the one in charge of the market. The next step is to establish recent higher lows and use trendline to connect them. So where is our recent higher lows? We have our first significant low here, then we have our second significant higher low here. So what we want to do now is to use our trend line to connect the two higher lows, but I love to use parallel channel to establish my trend line because it helps me to connect both the wick and the body of the candlestick together. So after establishing this trend line to connect the wick of the candlestick and also the body, it helps me to get a perfect zone in the market to establish my POI. Next step is to exercise a lot of patience and wait for a proper retracement so that the sellers can push the price action to mitigate the uptrend line so that we can buy after the mitigation of the uptrend line and take a buy opportunity to the upper side. Let's see the next formation of the candlestick. Right now the sellers are pushing the price action towards the trend line zone. We must exercise a lot of patience and wait for price action to mitigate the trend line before we execute. Now the price action finally mitigates the trend line around the zone. The next step is to scale down to 15-minute time frame and execute by using our last step blueprint. We are using chart pattern for execution. On 15-minute time frame, if you look at the formation of the candlestick or the price action, you realize that price just gave us a chart pattern that represents buyers in the market. And what are the chart patterns we normally use to execute buy position? First one is inverse head and shoulder. Whenever we spot the formation of this inverse head and shoulder, we have to exercise a lot of patience and wait for the price to break the neckline before we execute. We want to see a bullish candlestick to break the neckline of the inverse head and shoulder. The second chart pattern we normally use for buy position is equal low or double bottom. And to use this double bottom, we must wait for buyers to break the neckline of the double bottom at the point of interest. Looking at the formation of the candlestick right now inside our point of interest, if we change the chart to line chart, you will see a formation of shoulder, head, and shoulder zone. This is unmitigated shoulder zone because price action did not come back here to mitigate the second shoulder here. So what we are going to do is to wait for price to mitigate the neckline of this inverse head and shoulder. We want to wait for candlestick to close above the neckline here so that we can execute. The first bullish candlestick to close above the neckline here will be our entry confirmation. So let's see the next candlestick formation before we execute. Finally, we have a major healthy bullish candlestick momentum that just invalidate the neckline of this inverse head and shoulder. So we're going to use our long position tool. We place our stop loss below here, then we target twice of our risk to reward. So let's see what the price action will offer us on this trade. One thing about Forex trading is all about patience and also trust your analysis, your system. Allow price to come to you. You don't have to force it. Finally, the price action smashed our TP level. If you are still finding it difficult to achieve consistent profit in your trading journey, this is the perfect time to take action. We have created a free community on Telegram where you get access to valuable trading insights, weekly profitable signals, and step-by-step guidance to help you avoid common mistakes most traders make. It doesn't cost you anything to join. Just click the link in the video description and become a part of a supportive trading community that is focused on helping you to grow and finally see consistent results. Let's take a look at another example on gold market using this Trendline trading blueprint to trade gold market. On the 4 hours of gold right now, you see that the price action is trending to the downside. Sellers are the one in charge of the market, and we don't want to trade against the trend. Since the trend is downtrend, we just have to be on the side of the sellers by taking only sell opportunity. If you look at the structure on 4 hours time frame, you see that the last high was created by the buyers here, then sellers created a new low here, lower high, lower low, and price invalidated this last higher low here, then price created a new lower high, a new lower low, lower high, then lower low. On 4 hours time frame right now, buyers are the one in charge of the market. 4 hours is bearish. So we're going to use 15-minute time frame for execution by using our chart pattern. The next step is to establish recent lower highs and use our trend line to connect them. There are different ways to establish your trend line, but I love to use parallel channel because it helps me to connect the trend line very well so that to have multiple touches right now. So the purpose is for the price to mitigate or to touch the trend line multiple times. The more touches on the trend line, the more solid and valid it will become to hold the price action whenever price comes back to mitigate the trend line. So what I'm going to do now is to exercise a lot of patience and wait for buyers to push the price action to mitigate the downtrend line so that I can take a sell opportunity around the zone to the downside. And if you look at the formation of the candlestick right now at this support zone, is a sign that buyers want to push the price action to the upper side and mitigate the downtrend line as a result of this hammer candlestick formation. You can see this hammer candlestick formation. It represents buyers. It's a bullish reversal candlestick pattern. So let's see the formation of the next candlestick and let's wait for buyers to push the price action and mitigate our trend line. Finally, price action mitigates our downtrend line. The next step is entry, whereby we use chart pattern to execute our sell position on 15-minute time frame. There are two chart patterns we use to establish this trend line trading blueprint. The first one is head and shoulder for sell position, while the second one is equal high or double top. To use this chart pattern, you have to exercise a lot of patience and wait for price to mitigate the neckline before you execute this chart pattern. Let's change the chart to line chart. Right now we have shoulder zone around this place, we have head here, then we have another unmitigated shoulder around this zone. Let's take it back to candlestick formation. So we need the price action to break the neckline of the head and shoulder before we can execute. So this place is the neckline of the head and shoulder. We need a strong bearish candlestick to close below the neckline to give us a final confirmation that sellers are now fully ready to take charge of the market to the downside. So let's see the next formation of the bearish candlestick that will close below the neckline. Now we have the bearish candlestick that invalidates the neckline of the head and shoulder, right? So let's use our short position tool to execute this trade. So we are positioning our stop loss above the head of the head and shoulder pattern, then we target twice or the next support key level around this zone here. So this is going to be our final take profit level. So let's see what the price action will offer us on this trade. Now the price action is heading towards our TP. Finally, price mitigates our TP zone. Yeah, if this video has added value to your trading journey, inspired you, or blessed you in any way, we will truly appreciate your support for the channel. The best way to do that is by simply clicking the like, subscribe, which tells YouTube this content is helpful and pushes out to more traders who might need it. And also don't forget to stay connected with us and continue receiving practical tips, strategies, and insights that can make a real difference in your trading results.